Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's consider the situation on the gold market as usual. So as you can see, despite that recently we see on the Forex market was significant rally, and in general this was some kind of the happiness, especially on the traders on the euro currency. So on the gold market, as you can see, wasn't able to show any significant upward action. Well, and the degree of the happiness here is of course a bit less than on the Forex market and on the stock market. Although in the stock market we also do not see a really very big rally. Well, there are a few reasons for that. First of all, despite that mostly the high level of inflation that we've got recently and confirmed by the CPI numbers is already priced in, and the levels that we have got in the recent report doesn't suggest that Fed should adjust something. So it's neither increasing the expectation nor decreasing it in relation to the Fed policy, which have brought some relief from the markets. But for the gold market, it's a bit different story. It's just because it has a bit different relation to the interest rates compared to euro currency. For example, if on the euro currency you'll take a look on the dollar index, it's just based on the weakness of the dollar, euro currency has risen, and that actually has led for the gold market to some minor appreciation that we saw recently. Speaking on the interest rates, it's a bit different story. First of all, on 10-year yield, we do not see a really big drop anymore. So market just shows some pullback and then stands flat. But so what is more significant, if you take a look at the real interest rates, the gold approximately has the duration of the 30 years. And we need to compare the real interest rates on the Treasury Inflation Indexed securities on the 30 years. As you take a look what has happened in recent times. So yes, on these few recent sessions, we see some pullback on the real interest rates, but in general, since the beginning of the year, real interest rates have increased. So this is negative impact on the gold market. It's just because of the rising nominal yield and it's approaching to the inflation. So it stands negative, but the level of these negative rates have decreased in 2 times. So it was minus 40, now it's minus 20, or even smaller. So that makes some holding pressure on the gold market, and that explains why it shows a bit different reaction, because actually the recent CPI numbers doesn't promise to Fed to stay on hold for interest rate decision. It means that it supports the idea of the rising interest rates, and that makes some holding effect on the gold. As a result, what we could expect from the gold market in nearest time. So in general, bullish performance and bullish context still holds here. According to our long-term view, we do not treat this type of action here as a real bullish reversal on the gold market. And we do not expect that we will see real bullish reversal in the gold market in the first half of the 2022. We suppose that it should happen later, when the rising of the interest rates will not be able to control inflation. So inflation, by our view, should remain high, despite that interest rates might approach to the 2%, for example. But at the same time, high interest rates starts to hurt the fragile economy recovery, and that will be the turning point for the gold. But this should happen later, somewhere in the second half of 2022. In the current performance, with this upward action, we treat it as a short term. We do not expect this will be some really outstanding action. So, but anyway, currently, as you can see, gold still keeps the bullish context. So we stand above these lows, we stand inside of the range, trend stands bullish. So currently, market is calling around the same resistance, 1830, that it can't break right now, based on the reasons that we just have discussed. So it means that on the lower time frame, in nearest time, as market wasn't able to proceed higher immediately, and as other market stands, it's a bit some overextension. It's the same as the dollar index. So dollar index currently stands, I suppose, at some oversold area, supposedly. So let's take a look on the daily chart. At least euro stands at overbought. So it could mean that dollar index stands at oversold, right? So you can see that the dollar is oversold, and it means that will be some pullback, which makes some negative impact on the gold market as well. That's why currently on the gold market we do not consider taking the long position again, as we discussed yesterday. Currently we suggest that some pullback here should happen, or has big chances to happen, and we do not exclude the chance that we could get here on the top reversed head and shoulders pattern before upward continuation. It will be somewhere to the 1810 retracement. So it might be deep retracement here and then upward continuation. Because take a look, guys, another indirect sign which suggests some weakness. So take a look at this very strong sell-off, upward action. Well, not as strong. So it's more or less gradual, it's a bit choppy, and it means that the bearish momentum still exists here, which makes us think, and position of the other markets, as I said, on the dollar index in particular, tells us that the chances on the pullback here looks stronger than upward continuation. It means that currently we do not consider taking new long position, which means on the hourly chart, our entry yesterday was perfect. So take a look at 1814, clear ABCD retracement, Carter's triple 2, and upward continuation. If you have taken position here, you could either move stops to the break even if you would like to experiment with your position here, or you could book a result and watch for a deep retracement. Here we do not exclude appearing of the reverse head and shoulders pattern. Oh, sorry, not reverse, direct head and shoulders pattern. This will be shoulder, head, market drop back, another shoulder, and deep retracement. That's what we are talking about. Here we already have some divergence, as you can see at the top. So it doesn't mean that it definitely happened, but the signs that we see here makes us think that the chance for that more or less significant. So you could think about it, make your own decision, and act according to your view on the market. So that's actually what we have currently on the gold. Let's see what we will get today on the PPI report, although we suggest PPI hardly will make an impact, but mostly tomorrow retail sales. That's really could bring some effect on the gold market as well.